You know what Microsoft stock is this week? On these alleged disappointing earnings, down 1.4%. The point being, Bill, is that nothing that happened this week changes the narrative that the trend is up until it's not, and that good enough earnings are good enough for now.
Yeah, it's a bull market, and it's been a bull market really all year. I'm going to echo what Jim had just said, and I've been talking about this the last couple of times on the show, is, August to October, I have a little bit of fear we have a pullback. And I don't think it's going to derail the overall rally. I think we could finish the year at record highs. But I want to be prepared for that pullback. I've trimmed a little bit and kind of get ready for that. But what really pointed, out of the week that I thought was most important was the GDP data yesterday. We're not talking soft landing anymore. We're talking no landing. And so my fear would be looking at the Fed watch tool, the CME's Fed watch tool, the odds of a hike in September are only 20% today. Yesterday, they were nearly 30%. The soft PCE data and ECI today brought that down a little bit.
It's like 1 in 3 now for November.
Yeah.
So it's not like we're completely writing off more hikes from the Fed. It's just we assume that they've now entered this pattern where they hike, they pause, they hike, they pause, and maybe they're done.
Yeah. I mean, I'm worried that they're going to squeeze in another one, maybe two, or at least it's going to come on the table, and that's what's going to throw the market off. And right now, yesterday, the 10-year yield got above 4%. The market didn't like that. There was a bad 7-year auction. You had the BOJ news.
The market didn't like it for about 10 seconds.
It's like right? Wayne's World. Game on, game off.
Because yields pulled back a little bit today. The BOJ did its thing, and you have the resumption of the rally.
Yeah.
To our point, that what felt upsetting for about 5 minutes was just that.
Yeah. And I think there's a couple line in the sands that I'm looking at, and I obviously position in securities, but I trade the indices from a futures level, and the S&P futures 4560 has become the line in the sand. And yesterday, upon all of that selling, it held. So for now, we've been able to rebound and be able to use that. But I have not seen an outside bearish candle like we saw yesterday that has not seen follow through in years. So this is impressive to see the market rebound, and here we are.
Jim, Bank of America today.